The million dollar question: how do entrepreneurs transition from self-employed to owning a business that turns a profit? My name is Chris Waters, and this podcast has the million dollar answer. Welcome to CEO Secrets. Hey guys, it's your host, Chris Waters of CEO Secrets. Welcome to the show. I have got a pretty incredible woman on the show today, Marla DiCarlo, ranked on the Inc. 5000 list this year at number 376 out of 5,000. Her business was ranked as one of the fastest growing privately held companies in America. Marla's got a background in M&A and accounting and started a company called Raincatcher, where she helps business owners get their business ready to sell so they can find the best buyer and get paid the maximum dollar for their business. Marla, welcome to the show. How are you doing?
Thanks, Chris. I'm happy to be here.
Well, we have, pretty large audience of people that are self-employed and own a business across the SMB space. What type of companies are you working with?
Yeah. So Raincatcher, our secret, our sweet spot is between that million to 10 million. That's I call them, those are our people, but
in gross revenue or net?
That would be enterprise value. So usually that's going to be anybody that's about 500,000 in revenue, about 250,000 in profit and loss, net income and above is our people.
You are on the right show, because I would say that's a large percentage of our audience is somewhere in that range. So how did you get into this? You got an accounting background, you did M&A. What was the light bulb moment to say, hey, I'm going to go help people learn how to get ready to sell?
I know. I have a really strange background how I landed in small business. At first, I always take people back to college. I went to school originally to become a social worker. I know it, Chris. And then I went, okay, this does not work. Just had a different way that I thought about things. And so I went into accounting and love numbers, always, had an aptitude for math. But really what it was is I just enjoyed financials. I enjoyed that story. I could see it right away. And that led me to branch off with an owner that I was working with into mergers and acquisitions. He had about a 500 million portfolio. My role was fly out, meet small business owners, figure out what was going on in their business. And that's when I fell in love with small business. So many stories.
Yeah.
And then eventually I started my fractional CFO company. And that's where I made the most impact, I think.
Businesses between call it $1 million and 10 million, it's still a very fragile state. I mean, you're not, you don't have a large enough business to where you can have a lot of missteps, because you could be sunk pretty fast, even at 10 million in gross revenue.
That's right.
Well, I mean, the show is CEO Secrets. Share with us the secrets.
The secrets.
How can you show us the money?
I love it. It just came to mind as I used to do this presentation when I had my fractional CFO business called The Power of Your Financials. And I know a lot of people now use that. I think that's kind of become understanding the numbers, make sure that you understand the secret and the story behind your financials. But we're discrediting how important that is by it becoming so, that's the tagline that every business advisor uses, if that makes sense, because that is the truth. Accounting is the language of business, and you have to understand your numbers and understand what's going on in your business before you can make any type of decision. And I think that's CEO secret number one, Chris, that I'll share with your audience.
So understand the analytics, understand reporting across departments to make informed decisions. Is that what I'm hearing?
It is. And it's more than that. It's also understanding how you're performing against what you thought was going to happen. So for instance, I always talk about a budget. Every business owner, usually at some point in their career, hopefully every year, does a budget. But then when I would go in and talk to that business owner and say, okay, well, how are you performing against that budget? They would go, huh? Because not everybody puts it to use. So not only should you have a plan, an action plan for that upcoming year, the next 5 years, and create a budget around that, you also need to track, the real life cash flow, have a cash management plan in place. I call it, you've got your roadmap, this is where you want to go, but then your cash flow is your GPS, because there's going to be detours along the way that you have to prepare for. So it's more than just the analytics or the metrics or, benchmarks and all those fancy terms that we use. It's applying that to something real to help you make educated decisions as a business owner.
A lot of people, when they go to sell their business, they want to get that multiple that a technology company gets.
Yes.
What's your advice to people in the SMB space about, trying to be positioned more as a technology company to maximize your exit?
Yeah, that's a great question. And that is our differentiator at Raincatcher. Most business owners that we talk to in that million to 10 million space have created a business that is thriving, that has free cash flow, that has, oftentimes it's not owner dependent and has people, that they can rely on to do their sales and take customer service complaints or whatever. But they also don't realize that there are other factors that you need to take into consideration in order to fully maximize a business and get the premium price for your business. So, Chris, I often talk to business owners about, listen, if the valuation range, let's say for your business, is between 3 and 5 million, let me tell you what that's going to look like. Because let's say we push and we go to the market and we ask for 5 million, but you're kind of more, maybe 3.5, 4 million is the majority of the business buyers, I think, that are going to be interested in your business. What happens is if you don't have a premium business, you haven't set your business up to be turnkey, it's not owner dependent, you don't have supplier dependencies, you're able to scale, you have differentiators. There's like 8 factors that contribute to building a premium business. What will happen is you're not going to have as many choices as what type of buyer you want to sell your business to. And I might get you that 5 million, but if I only get 25% in cash at closing, is that a great deal for you? If you're carrying 75% as an earnout or a portion of that as a seller's note, is that what you wanted? So it's understanding how to build a premium business so that you can have more choices on buyer, deal terms, and then get the full maximum value for your business.
Can you name off those 8 factors, or should we refer somebody to read a book or something or some kind of guide?
Yes. So a couple things that you can do. We actually offer a 13-minute assessment that you can take, and we'll give it to you for free. And it will give you a score in those 8 different drivers. The other thing, and I'll do a shout out for John Warlow, who wrote the book Built to Sell. I think that's an excellent book for any small business owner to read. And he'll go through in that book as well, the 8 drivers. And we're happy to talk to anybody about what that means and the score and how to build a valuable business.
Mm-hmm. How often are owners having to do an earnout versus not?
Yeah. So, the majority of the time, depending on what type of buyer and how many buyers you bring in, so type and the number of buyers, most business owners are going to have some type of earnout, tied to the performance of the business. Oftentimes what we push for is that second bite at the apple. So they get, what their business is worth. But then because they're going to continue with the company, let's say they agree to continue for a year or 2, we'll do some carve out of the equity so that they can continue to have, money from how they're contributing to that business. We don't like to have an earnout because that owner loses control of a lot of the decisions that they make. And once that buyer comes in. And so, we try to not have that happen. I would say if I'm going to give a percentage, I would say probably, 50% of the buyers in that million to 10 million are often going to have some type of earnout or seller's note.
So in real estate, agents, for example, use the MLS.
Yes.
What do people use in your world to find a database of all the businesses for sale?
Yeah, great question, because that's part of the problem. There is no MLS. So what we use is, first off, there's so many different valuation methods. So we'll sidebar that for a minute. But what we use is comps. So the problem is that trying to match a business, which is so different. Think of all the different businesses, like in just marketing, for example, all the ways that they have differentiators between, oh, they do this, or they add this, or they sell this product. And so trying to find apples to apples, like an MLS in real estate, is very difficult. So a lot of different software giving us information on comps, and then our own history, of different sellers that we've taken to the market.
What kind of multiples right now are service-based businesses getting versus like a tech company?
Yeah. So service-based businesses, below 10 million are going to be anywhere from, a 2 to, I'll go as high as a 4. It's probably closer to a 3 multiple. A tech company,
is that a multiple on EBITDA or on gross revenue?
On EBITDA. Yes.
Okay.
And then we can also talk about, one of the things in that million to 10 million space is we work with something called seller discretionary earnings. So though we are working off of EBITDA, we're also adding back expenses that are not necessary to run the business. A lot of owners, are going to have maybe some travel costs that they were able to pass through on their business, reduce the taxes, of course, but it wasn't necessary for the true operating. So the first thing we do is true it up to the operating performance of the business, and that's called seller discretionary earnings. And that's normally then multiplied by a multiple. Service-based business, a really good business is going to be about a 4, anything below 10 million. If you're looking at tech, I think that's going to be somewhere between a 3 and 7. And it just kind of depends on what setup they have. There are a lot of factors that go into multiples.
3 and 7 EBITDA for tech? Yeah. What about tech companies that aren't profitable yet but they're growing?
Keep growing, Yeah. I mean, okay, so there are those companies that they have something so unique. It may be a process, it may be a product, it may be a service, it might be their customer list, it might be their team. There are those companies that, especially a private equity group will look at, and even though they're not operating at full potential and they might be operating in the red, they might be interested in that business because of the unique, differentiator. We call it monopoly control that business has. That's an add-on to another business. Most of the time, a business needs to be profitable for at least 2 to 3 years, unless they have something that really stands out from their competitors.
Does anything unique happen when you get north of 10 million in revenue?
Yes.
Like unique tipping point when you exceed 10 million in revenue per year?
Yeah. I think what happens is you now have a different company than obviously at a $5 million company. That there's different levels when you're going through the phases of developing your business, right? Startups, owners always going to be involved. Everything comes back to the owner for most businesses. By the time you reach 5 million, you normally have at least a couple of executives and team members that are able to help you. And you have a pretty solid customer base. And, normally you're making some revenue. When you get that at 10 million, that's a different realm. You need to have a CEO and a CFO who has been there, done that, is what I would say. Somebody that understands what it takes to continue to scale that company. Also, another thing I see, a tipping point at the 10 million, is actually companies start to run out of cash flow. They haven't planned properly. They don't have the investors that they probably need in order to continue to grow that business. And so they make decisions not realizing that they're actually not, maybe they're adding to the top line revenue, but they're subtracting from their bottom. And unfortunately, they run into trouble.
Interesting. So a lot A lot of companies in the early stages can, grow 2, 3, 4, 500% a year. Like, for example, you mentioned CEOs and CFOs that have been there and done it. What are they doing to continue getting those kind of growth rates once you get north of 10 million?
Yeah. So I think one of the things that's very important is to have the right partners involved in the business. A lot of times what I've seen, this is my experience working with over 500 business owners in my career, is between that 5 million to 10 million, owners often start giving away equity, more equity than they probably should. And so there comes a point where maybe they haven't created a business where an investor or a group that could help them to get to that 25 million would want to invest in. So that's one thing that I have seen over and over again. I think one of the reasons why you see growth of 200%, 500%, they have the right team in place, the right executive team. They have the cash flow to be able to support them, to be able to scale successfully. They have the right information, meaning systems, technology, tools, processes. So onboarding new people is not a problem. Being able to onboard a customer is not a problem. And then I think lastly, they've taken into consideration the 8 factors that I feel is most important when you're selling a business. And that's they've determined what their uniqueness is. They've determined what other markets that they can scale into. They're set up for success. They understand their financials. And so, I think those are the companies that really stand out from just the average competitor.
How does the multiple change once you get north of 10 million?
It changes quite a bit. So when you're north of 10 million, you're not in normally anything below a 5 and oftentimes above a 10. If you set up your company the right way. We have worked with companies. I can think of one in particular. It was a SaaS-based company. So normally that would be a much higher multiple. Revenue was upwards, $25 million. Their EBITDA, I want to say, was somewhere around 3 or 4 million. Everything looked good. Unfortunately, there was a lot of negative feedback out there about the company. They didn't bring in the right executive team. And when buyers started looking at what they were buying, it was hard to sell that buyer on something that they could build versus something they want to buy. So normally a SaaS-based company in that space would be somewhere between a 10 to 13 multiple. We were getting offers back if we were lucky, at a 2, 3 times because they weren't set up for success. And a buyer said, I don't even know that I wanted to buy this. I could build this faster.
How would you describe the typical avatar of the people that are acquiring the companies you're representing?
Yeah, I mean, there's so many different types of buyers. I think recently we've seen more private equity groups coming in and wanting to take it on those million to 10 million businesses. A lot of those groups are doing what we call an add-on. They're adding on to the current business, model or industry that they're focused on. If you're wanting to have more control over how they continue that legacy, for instance, you don't want them firing employees, you don't want them changing your service model, then oftentimes an individual buyer is much better than going with like a strategic group. But that has been one thing that has changed since COVID and post-COVID, is we have seen a lot more private equity coming in and buying these $1 million to $20 million businesses.
Seems like that's happening a lot because there's just very few places to invest and get a yield, right? So
that's true too. That's a great point. Yeah.
Interesting. So if I heard you right earlier, to get to that $10 million mark, some of the things it sounds like you're recommending is people, processes, tech, your HR functions of recruiting and onboarding, client acquisition, client onboarding, client journey. Are these the type of things you're working with prospective clients on?
Yes.
You're helping them prepare?
Yes. It's one of the things that we wish that owners would understand and, put in place from the beginning. I do this presentation where I talk about taking the blinders off. Mm-hmm. And I understand why we do it. As small business owners, I've walked in your shoes. I've owned 5 businesses. Like, I understand what it's like to stress about cash flow and worry about how you're going to make payroll and get that next customer. So I've been in your shoes. However, what I encourage business owners to do is listen, take off those blinders, even though you are super focused on the next step in building your business. Think about some of these other things that we're talking about. How do you build uniqueness, that moat? Warren Buffett talks about the moat in your business, and you want to build a wide moat. So take that in consideration as you're making decisions. And those are things that we talk to business owners about before we take them to the market, talk to them about the options they have. And then we want business owners to think about this from the beginning. That's why I'm here. It works. Trust me.
Are you working with businesses to help them raise money?
No, that's not.
Just to sell?
Sorry, Chris, I didn't mean to cut you off. That's not really our wheelhouse. We have groups that we can definitely refer you to. And of course, we have a ton of lenders that we work with, but that's just our bread and butter is helping business owners to build a valuable business, maximize full value, and then take them to the market and find the best buyer for their business.
For the entrepreneur listening to this, I'm kind of curious, is there like some kind of quasi private equity play in the 1 to 10 million space for somebody that doesn't have any money, where they could basically like seller finance and acquire a bunch of businesses? Like, I guess as an example, like one thing that comes to mind to me is the moving industry. The barrier to entry is pretty low. You just need a truck and labor, right, to like start a moving company. And I'm just wondering, like, there's got to be a lot of people that's a high turnover type of business where hypothetically somebody could go in and like acquire a bunch of moving companies through, seller financing. Are there opportunities that you're seeing as an outsider that exist? I'm just curious for folks listening to the show that maybe they're looking for a new endeavor.
Yeah. Well, I think there's always opportunities out there. You just got to know where to look for them, right? And I think, I know there's like angel groups out there that, will help to fund a business and often focuses on certain industries. And so that's one way. There's of course investment pools out there, fund pools that people have put together that they're looking for that right business to be able to scale and grow. And so they'll put together a bunch of investors and oftentimes it's not, a private equity group. It's just a group of people have come together and want to look for a business. We do see those, we do have buyers that send us, their term sheets and say, hey, we just put together this family business. We've got, pool of funds that we can invest upwards to say $20 million. If you find a business that has X, Y, and Z, contact us. Mm-hmm. And, oftentimes that's one of the things that we're looking at when we're talking to business owners is what are the industries that buyers are focused on right now? And then even if they are a little bit smaller than what we normally would work with, we often put those in our database because we might have a buyer that wants to do an add-on. Coming back to your question around the moving company, one of the problems that business owners are having right now is, yes, does that seem like that's a great business? Not a lot of overhead. Like you said, it's just a truck, but labor shortages right now. Trying to find people so that the owner is not strapping a curio cabinet on his back. I don't know. It's a problem.
Yeah. Interesting. And you mentioned the buyer calls you, says, I'm looking for X, Y, and Z. I'm assuming the X, Y, and Z has something to do with the 8 drivers you mentioned.
Oftentimes, it seems like that is the factor that matters to a buyer. And I'll tell you why, because again, when a buyer is looking at a business, a small business, and I would say this 100% applies to any business below 10 million, the consideration the buyer is making is, can I build this business faster than would it take me longer to scale it and grow it by just building it and save my money? Or does it make sense to buy it and then continue to grow it? And the other thing that's really important is when a buyer is purchasing a business below 10 million, they're writing two checks. They're writing a check for the assets of the business, what that business, has done, the IP, the people, the customer list. And then they're also writing a second check for the free cash flow. What is that business generating? If you get a business that has great assets, but it's in the red every month, that owner is going to be prepared to fork out more money, right? It's not just the purchase price. There's a lot more money added on to that final price. And so there's things that a buyer takes into consideration when they're looking at a business that do tie back to those 8 drivers that I'm talking about.
I'm curious from like a marketing perspective, like what do you do to market a business for sale? Seeing as there's not like a centralized MLS, like what are you doing? Are you picking up the phone all day, calling private equity groups? Like what's the overarching strategy to maximize exposure from a marketing perspective?
Yeah, that's a great question. It's probably one of there's probably 3 milestones in the process of selling a business on the back end for the business broker. The marketing is so important. So it is really important to be able to showcase why someone would want to buy that business. Sometimes you get lucky and it's really easy. We could put together what we call a confidential information memorandum. Some people call it a prospectus, it's like an executive summary of the business. Sometimes you can put that together quickly because you have such a fabulous business. Other times you're having to really reach deep to figure out, okay, what type of buyer first off would be interested in this business? And then how do I showcase the strengths and weaknesses of the business in a positive way where someone would want to buy it? We spend a lot of time on the front end doing what we call sell side due diligence. First off, we go through an interview with the seller to understand the business owner, to understand their business so that we're speaking their language. We understand the strengths and weaknesses and why they're different from their competitors, how they stand out in their industry. And then we also look for any red flags because there's a lot that can happen during that process of selling a business that can, buyers walk away from it because they find one of those red flags. So looking at that business ahead of time. And then the marketing material we put together is very robust. We put together a teaser and then a full deck that we provide to those buyers so that they understand what is unique about this business, why they would want to purchase it. And what we're trying to do is bring in as many buyers as we can to generate what we call buyer attention. That's what the marketing does. And that's the importance of it.
There's investors that listen to this show. I've interviewed some of them. Where would they go to find a list of the companies you're currently trying to sell?
Sure. They can go to raincatcher.com. And at the very top, they'll see listings, and we'll have a nice little slide that they can do. So if they're looking for businesses over 5 million, they can sort out those, and anything under 5 million, look at those. They'll want to register as a buyer. We take that very seriously, confidentiality, making sure that they're viable and vetted and can purchase a business. But once they go through that process, then they'll be able to see listings moving forward.
I went to your website and I see the listings. It looks kind of like it's very well done, by the way, and very pretty website. I'm kind of, who created this for you? It's beautiful.
Oh, really? Thank you.
Yeah.
I have to tell you, Chris, if we could block this out. We had some issues over the Thanksgiving weekend, and we had to do some stuff, and some of our images are missing that we just discovered this morning. So normally it's even prettier.
Well, it looks fantastic.
We put a lot of money into building the website. One of the things that Raincatcher does that's different, and we are pioneers, is we generate a ton of leads doing digital marketing. Mm-hmm. So we're advertising to business owners, trying to, those business owners that have this, we'd love to speak with you. So we need to make sure we have a website that communicates to our small business owner, we're small business friendly and we're not going to treat you like a transaction and we care.
I would guess there's not that many people in the business broker world helping folks between 1 and 10 million.
That is so true. Yeah.
What kind of fee do you typically charge to represent an owner to sell their company in that range?
Yeah, it depends. Standard fee is going to be 10% of gross sales price, but every deal is negotiable because it really depends on the business and the owner and how hard. So you mentioned earlier, do you get on a phone and you just start dialing? Yeah, sometimes we have to. We try to be selective on who we take on, and we have a great reputation for having really good listings. 75% of the listings that we list end up selling, where I think the stats in a normal business brokerage under 10 million is only like 30% of the businesses that they list sell. So we take that seriously.
What's the average time it takes to sell the typical company? How long is it on the market?
Usually anywhere from 7 to 9 months. Okay. Sometimes it can take a little bit longer, but that's, 7-9 months is the average.
So I have to imagine a lot of business owners are fearful of listing their business for sale because they'd be afraid employees or key people are going to find out and bail. Like, how do you, prevent that kind of tension from incurring internally in the organization?
That is a fantastic question. Probably, I would say the number one or number two question a business owner asks us is, around confidentiality, because that is very serious. And that's a concern for every business owner that we work with. So a couple things. One, making sure that we vetted a buyer before we're providing any type of information to them, trying to weed out scams or competitors from just getting information. So we spend a lot of time interviewing the buyers and making sure that they're, legit. The biggest thing is how you market that business. So we have certain businesses that it's just too close, in their industry. Like it doesn't matter if you leave out what state they're in, how many employees they have, that somebody competitor is going to look at that information because it's just too close and go, oh, that's Bob down the street, right? So when we have that situation, we don't openly market them. We'll leave them off our listing website, and we end up putting together a strategic list and making those phone calls to strategic buyers that we think would be interested. I've had to do that myself a couple times, and here in Denver, even where it's just a small network. Most of the time, you just have to make sure that you're not putting out to the public private information about that business, and wait till you've vetted a select group of buyers. And then those are the individuals that you'll share the more private SIM, the executive summary, the prospectus with, versus just sending it out to the world.
You had mentioned a moment ago about red flags. When you do due diligence and other buyers, there's just some blatant red flags that just crush your ability to sell the company. What are the general top red flags you guys find that cause you to turn a deal down from representing the owner?
First thing that comes to mind is poor financials, and that could even be that the owners had, a bookkeeper, an accountant doing their financials, but they've just done a bad job. And unfortunately, the owner didn't know. It's always good to have a second set of eyes, specifically like your CPA should be looking at the detail and making sure the information being reported is accurate. I would say that is probably the number one thing is gross profit isn't what the seller's representing on the financials, not because they're hiding something, but it's just not being reported properly. And it's not as valuable of a business as it was originally showcased. Second red flag would be taxes. So unfortunately, a lot of business owners, will take off the books, some of their income and not report everything. And that can hurt you when it comes time to sell a business. Again, remember, we can always add back expenses, but the financials and the tax returns have to match in order to get, lending and get a serious buyer. And then I would say probably the third reason that comes to mind is there were tax issues or compliance issues that either the buyer knew about or did not know about. And then that always comes out in due diligence. We tell our business owners, listen, if there are any skeletons in the closet, I assure you the buyer is going to open that closet. So let's just talk about it now so that way we can figure out the best solution and not spend all this time and then get to due diligence and have the deal fall apart.
This has been a great episode. This has been so insightful.
I'm so happy. I've really
you have shared some nuggets. Some good ones.
Well, I love what I do, Chris.
Man, you're like a lifesaver for the SMB business owners out there.
I tell you what, the one thing that I always say is I may not know everything in business brokerage or accounting or whatever else, but when it comes to small business, I'll go toe to toe. Been there, done that. That's my people.
Yeah. It's so refreshing to hear somebody that, understands the phases of the growth curve, from like 1 million to 5 million, 5 million to 10 million plus. And it's interesting how, it's like at each stage of that growth curve, it's like a different set of problems you have to solve. And then when you solve them, you kind of leapfrog to the next phase. So I guess for a lot of people listening to the show, sounds like you should ideally be looking to shoot to get north of 10 million in EBITDA. I'm sorry, obviously, but 10 million in gross revenue, obviously be profitable. Focus on those 8 drivers and start getting some coaching and advice from somebody now before, you want to sell the business, because it takes 7 to 9 months, you said. So, yes. And I imagine you want a couple of years of strong financials, so that, a very strategic thinking person should be kind of planning this 3 to 5 years out to get the best outcome possible.
Yes. 100. Yeah. Could not have said it better. Thank you. Yes. And that's why I'm here. I mean, with Raincatcher, one of the differentiators of our company is we truly are advocates for the small business owner. We will not treat you like a transaction. And my role in the company is to continue to educate small business owners on why this is important and start thinking of it now. Don't put it off.
Let me ask you one final question before we wrap up. Would you work with someone that's trying to sell just like a 20% share of the company to take some money off the table, or would that be a different type of investment banker?
We would love to speak with you is what I would say, because it kind of depends on what that relationship looks like, within the company itself. So what I would say to your audience is if you have any questions about wanting to find money for your company, wanting to carve out money, if you have, you want to sell a percentage of your company, or you want to sell the whole company, we'd love to speak with you. And what I promise you is we will never just sell you something. We will always put your interest before our own. And usually we have some really good referral partners.
Cool. So it sounds like anybody that's interested in getting more info needs to go to raincatcher.com. Is that the best way for them to reach out to you?
That's the best way. Yes.
Cool. Well, guys, thanks for tuning in to CEO Secrets. Be sure to hit that subscribe button. Go check out raincatcher.com. It's a great looking site. They've got some great listings on there. This has been really informative. Marla, thank you so much for being on the show. Congrats on ranking so highly on that Inc. 5000 list, ranked 374. That's no joke. That's some pretty massive growth. So kudos to you. And we'll see everybody next time. Bye, guys.